Hey, what's up, everybody? What's going on? It's Tuesday, April 20th. Market correction, market correction. Yeah, we had to pull back in the market today, no big deal. I think that might have been it. It held my support levels, which I sent out to my subscribers earlier today. But there is a small chance we could continue a little bit further on the downside. I see this as a shakeout of some of the bullish sentiment that has built up. There may also be some technical factors related to options expirations. But anyway, it's technical. The bigger picture remains bullish, fiscal. That's pretty much all you need to know. Now I want to talk about, people have this obsession with the Fed. Like really, it's an obsession. They can't get off of it. I mean, they talk about the Fed all the time, printing money, inflation, the Fed, debasing the currency. I mean, it's really just an insane obsession. They talk about the Powell, they talk about Bernanke, they talk about Yellen. They're this, they're that. Look, let me just put it to you very simply. The Fed is a bank. It's a little bit unique as a bank because it is a bank which doesn't really require capital in order to make loans or, to credit somebody's bank accounts. Like your commercial bank where you do your banking, they credit your bank account. Like when you apply for a loan and when you're approved for a loan, the bank creates a deposit in your account, out of thin air. The only thing that differentiates a commercial bank from the Fed is a commercial bank is limited or constrained by the amount of capital it has. That's what limits it in its ability to credit accounts or to create loans, etc. All right? The Fed really doesn't have that limitation, although if it came down to negative equity or negative capital, there might be a little bit of a political hullabaloo about that, but technically the Fed does not need capital. That's the main difference. The other difference about the Fed, which again is just a bank, is it is the regulator or one of the regulators, primary regulators of the banking system, the financial system. The Fed has regulatory powers. Ordinary commercial banks don't. They are under Fed supervision and oversight. All right. So in that regard, the Fed has a lot of power because, it can kind of change the rules. We saw this with the SLR and, frequently we see kind of rule changes and stuff like that. But people get so freaking worked up about the Fed. I mean, when the Fed adds reserves, right, it's taking something away at the same time. I mean, it'll add reserves, what these crazy people, scream about printing money, they're printing money. When it adds reserves, it's buying something or removing something of equal or greater value. So it will buy government securities. Maybe the bank will have to post collateral, which is some asset that it has to the Fed, okay? So, I mean, it's basically a wash. Really, it's basically in the Fed's favor, just like a bank. When a bank makes a loan to you, you got to pay the loan back with interest. So the bank gains, the Fed gains. That's how the Fed makes its money. But again, then the Fed has to turn all of its profits over to the U.S. Treasury with the exception of what it needs to operate. And that's only a small fraction, maybe 3 or 4% of what it makes. I mean, the Fed made something like $100 billion last year. It turned over something like $97 billion to the Treasury, and it keeps the 3 or whatever it was, 3 or 4 billion. That's what it needs to operate. So this whole thing about printing money and getting so obsessed and you know, crazed about, you know, Powell or Bernanke or something, and you know, they're always kind of portrayed or spoken about as the most powerful people in the world. It's a bank. Now, governments like the United States government, with its, you know, has its sovereign fiscal authority, the ability to create US dollars, that's power, okay? And we have seen the power in the government's, you know, attacks on countries that the US deems as adversaries or enemies, the ability to restrict those dollars. You know, I've been all over that. I've been talking about that so much, about the dollar-based global financial system, that the US has so much power over that and so much control over that. Now that's power, but that's the government, that's sovereign power. The Fed really is like a branch of the government, all right? I know a lot of people, you know, they still are you know, in this belief that the Fed is a private corporation, which I don't know what private corporation has to turn over 97% of its profits. You know, some big, powerful corporation has to turn over 97% of its profits to the government, and whose board of directors is nominated, you know, by the president and has to be confirmed by Congress of all, you know, bodies. Congress, you know, crazy Congress with every different kind of, you know, opinion and nut jobs in there. I mean, some big corporation that is. So, I mean, when I see all this stuff, if somebody's going to rant and rave about the government's fiscal power, then I get it, all right? I get that. And if somebody's going to rant and rave about the government's ability, because of the dollar-based global financial system, the government's ability to reach across the world globally and literally shut down, you know, business or entire nations, that's power. That's like military power. Okay, I understand that if somebody was going to rant and rave. But if somebody keeps ranting and raving about the Fed, which is just a bank that differentiates itself from any other commercial bank, only that it does not need capital to make loans, but that's basically what it does. There's one more thing I should say, that by virtue of its rate-setting power, the government, a Freudian slip, I said the government, and it is the government. The Fed is a price setter. Now that's big, that's important, but nobody talks about it in that regard, or when they do, they have it backwards, because they rant and they rave about low interest rates are going to cause inflation, which is exactly not true. It's the opposite. And you know, we need high interest rates to squash inflation, and that's actually, high interest rates equate to an increase in prices, right? Because the cost of credit is reflected in the cost of all goods and services. So I hope you're not one of those people who are ranting and raving about the Fed. And I hope you are one of those people who, when you hear somebody ranting and raving about the Fed, you just laugh and realize how stupid that person is. Anyway, just wanted to talk about that today. Don't forget, go to my website, get a 30-day free trial of MMT Trader. I'm the only one who has an applied approach to MMT. I use the concepts and understandings of MMT to help people and myself invest in the financial markets. Bye.